we go. Looks like it's all working. Cool. All right, guys. As usual, let me know what's on your minds. We can discuss it. What I got here? The silver futures. Here's the 30-minute chart, and here's the tick footprint chart that I like to look at. When we were last talking, the price was about here. It drops and bounced right off that level. Look at this. There's the drop and the bounce. Saber, you got a hot mic, a lot of background noise.
Sorry.
So there you go. This is interesting. The price drop. This is the silver futures. And looking at these footprint tick charts, I like to look for anomalies. You can see right here. The red highlight is an imbalance, more sellers than buyers, and then the price did not go down. Instead, it went up. That's your anomaly. So you already have a clue there of price action going further up. Then it did some kind of double bottom. Not ideal, but it's there. And sure enough, the price moved up from there. Look at that. Not too bad, huh? Overall, it has been a choppy market, huh? These last 24 hours or so. Let's do the all right, so this was the MES, sorry. Look at that. And then Q as well. Down and bounced off that level we got. Let's see what that looks like. Down here. So the price came from up to down to the level. And again, you have the anomalies here. You can see the red prints, red dots, telling you about an imbalance, and the price did not go down. Instead, price moved up. You're getting a second bottom here. That's higher than the first with the anomalies here. So you're getting a lot of clues here with these charts about basically when the price seems to want to turn around. Then the key is where do you enter and what's your confirmation for the entry. And then, managing the risk. Taking a good liking to these footprint charts. Good fun, huh? So anyways, what do y'all want to talk about? What's on your minds? For me, it's all footprint charts these days.
I think it's free footprint chart on TradingView.
Free? No, it's not free. It's on one of their premium subscriptions. So they have a trial period. I had the trial thing from last week or so, and I just got the just paid for the subscription a few hours ago.
I think the 1,000 tick is in one of the subscription, and the footprint is in another. All right.
Yeah.
Footprints is a premium and above. Premium and above.
Okay.
And
But in premium, you cannot get 1,000 tick.
No, you're right. It's a premium has the footprints, but above that has footprints and tick. The ultimate, I think it's called ultimate. It's 70 and 80% off now. The next 5 days.
Okay, thank you.
Yeah, you might want to hook up. It's called the Valentine's Day deals.
Yeah. Yeah, that's what I clicked on, I think, a few hours ago. There's some huge discount, like 70 or 80%, something like that. And so I think I see we got a hot mic as well there, buddy.
Yeah, I was asking you if you got the premium one.
Yeah, whatever that highest level of subscription they have is, whatever they call it, ultimate or premium or whatever. It has all these functions in it, all these features. So yeah, I just got the annual one, so it would have been like, I don't know, $3,000. I paid like $500, something like that. Yeah, no big deal. And for those of you who were not here in our previous session, I changed the settings around here on these charts, where what I'm really interested in is these highlighted dots, these red ones and the green ones. You can see the green ones up here. That's telling me there's an imbalance right where it is. And the blue lines here are just volume at that price point, and the white one is the highest volume. So really, but it's the imbalance is what I'm most interested in. That's what I'm focused on. So again, using the 80-20 principle, slowly removing the noise from these charts. So bit by bit, I'll evolve this one as well and see how simple I can make it. And then, yeah, that's good. Makes it easier to read. What you got, guys? Was there someone there?
Hey, good morning, Avi.
Tara, good morning. What are you doing up so early, man?
Yeah, man, I woke up early, so I thought I'll join you guys, see what's going on.
Fantastic. Good,
Avi,
good.
regarding the white line on the candle, this is what they call it, this is where most of the interactions happened. If you take a look at it, you'll find most likely the candles need to take it out before they keep moving.
Mm-hmm. Yeah.
I do this on the daily charts, and sometimes with the targets, I look at testing these levels again. The center, I just woke up, so I don't remember what they call it. So,
yeah.
The center of whatever.
POC, points of control.
Yeah, points of control. Like if you put this is gold chart, right?
This is the MNQ.
Yeah, if you try the 4 hours, you'll find that most likely it will take the previous candle or the previous day. Hey, good morning, Oliver.
Yeah, I like that. I'm using it for that reason as well. Primarily, after I identify an imbalance, let's say down here, and then I identify the price has moved up from there. So it should have moved down, but didn't. Instead, the candle moved up and closed here. And the next candle will close even bullish, went further up, and then even starts making a new high just about in this area. I'm watching these white lines move up, and that to me is a confirmation. And on something like this, let's say in this price action, if I was identifying this as a reversal, then yeah, watching it move up, and I'm also watching the higher volume areas. You can see right here, it coincides with the previous high volume right there, and then the highest volume, the POCs, slightly above that even on this green candle. Once I'm beginning to see the high volume move up and corresponding with the previous, then the entry might be in this area, the way I like to see it. And ideally, perhaps I'll put it below the imbalance. The stop will be below. Okay. So that would be the stop out range, and that's how I'd manage risk on this.
Yeah, I got it.
Sorry, good. Everyone's got a hot mic today. What's going on? Yeah, this I'm really interested in this because it's not just simply watching the point of control move up, but how is it dealing with previous price action? So you have high volume right here and right here, and it moves up above it, comes down and bounces off it here too in this candle. So it's very insightful, I think. I'm just kind of watching what's happening at different price points. But again, you don't want to watch these charts all day long. We were discussing this earlier. You want to watch them only at key levels. So what I'm doing for now is finding levels on this chart. This is the 30-minute chart. And when the price gets there, down here, you watch it. If you're watching it all the way, you go crazy. So I think that's what's good. What we got here? Oliver, you got a few good trades earlier. Nice. Please do share. Love to see good trades, good execution. This is the Russell.
Hey, good morning, Avi.
Morning, Sumit. How are you?
I'm good. How are you?
Good, good. I'm awake.
So I also subscribe to this footprint chart, and as you're saying that don't look. I started looking. I just spent so much time in just looking. I forgot to take the trade.
I forgot to take a turn. Oh,
This
man.
whole lot of data, and looking at it looks so beautiful.
Oh my gosh. Don't tell your wife these candles look beautiful. You'll be in trouble. But yeah, there's a lot of information here. You can really get lost in it. So the key is in where do you look at it? Of course, the simple one is find big picture levels and wait for it. But then have to identify it there. There's no point trying to identify reversals in a place on the chart where it's basically in the middle. It's going nowhere. Look at this 30-minute chart. You're watching it, let's say over here. Let's zoom this way. You see it's just gone up and come back. And if you're looking for a reversal in this area, you're probably going to get chopped up and stopped out. You want to be on a place on the chart where it really is a point where the price seems to turn around, like right here. This went straight up, and that's your consolidation. It pulled back from there. It didn't really truly reverse, but pulled back from there. And that's as far as I want it to go. So simply put a line there. And then when it interacts with that level up here, then you watch it. You might watch for a breakout, or you might watch a reversal from there, whatever it is. I think that's the key here, to really not be watching it all the time. Another thing that I've been trying to pay attention to and seeing how I can do it is just watch for an imbalance. Maybe have some sort of alert put in place where when there is a massive imbalance between buyers and sellers, that's when I'll get an alert, which could happen anywhere on the chart. Again, don't watch it all the time. Let the alert come to you, and then you can watch it. So I think over here on this one, you can see it went from down to up, and it peaked right up here. You can see these, let's zoom it a bit more. You can see these green dots up here. That's an imbalance of many more buyers than sellers. And from there, the price pushed down and closed over there. Sure enough, the next candle opened and it continued down. It even pushed up a little bit. You can see again the green dots and pushed down. So once you start identifying the imbalance, ideally you can have some sort of alert set up. If when the imbalance is there, you get alerted, and then you can watch it. You might get way too many alerts in a day, but gotta filter that. And then off you go. And then once I see this, again, the entry is a key point. What are you looking for an entry? So I'm watching the volume move down, watching these white lines move, the VPOC, and I want to see how it's interacted with previous, just recent price action. So over here, the overall price has gone up. And let's see, over here, the volume spiked, which you could see was there earlier as well, 2 candles prior. So that's an interesting zone. And let's see what else. Moving back, yeah, you can see that it's all in the same area. This is where the biggest volume was, right in this zone. So once it breaks down through there, basically below the white line in this case, that may well be the entry down here for the short. Ideally, I like to put my stop above the imbalance, so that's obviously up here. But you can also find an imbalance here, so you can put the stop in this area. You can see there's buyers, right? And then the price action generally went down a little bit. So you may use that. This is a bit aggressive. Or this one, this is even more aggressive right here. And then you're going short. So it's interesting. Again, I'm only using these charts for now for reversal opportunities. I'm not looking at catching breakouts. I think they're a little bit more complicated with these charts. By reversals also, in that sense, you can catch breakouts, which is the retest of the breakout, which in a much tinier picture is a reversal. So there's a simple way to do that as well. So again, as far as trading is concerned and trade strategies, it's very simple. There's only one thing I'm looking at, nothing else. Just one simple thing. Where's the price turning around? a bigger picture that could be an absolute reversal like this one, or it could be the retest of a breakout, which on a tiny picture is a reversal. And so to me, that's it. Just looking at this. And I've been able to take a lot of very interesting positions in the last 1 week. Those screenshots I've been sharing with you guys. The accuracy is really good. Being able to get into a position with a good little stop, and then having really good RVR, potential RVR, is huge. So I'm enjoying this. The results so far are very interesting. What do we got here? Tara got a couple of good trades on MGC, gold. Oliver and NQ and GC. Nice. There you go, guys. Green day yesterday. Yep. There you go. You guys know what you're doing with trading. You got to share your style with us. Fun.
Yeah, we have a question.
Yeah, go ahead.
So the chart that you were just mentioning, if you look at that VPOC, the point of control, it was actually stepping up. Did it bother you that it was stepping up where you were looking for the chart?
Up here?
Yeah.
Yeah, so when you're looking at reversals, in this case, it's going up and reversing down. Yeah, you expect the VPOC to step up until you get an anomaly, something very unusual. At what point does it stop stepping up? Well, zoom in again. As you said here, it's stepping up, and then it starts stepping down. That's your reversal, right? So they want to watch the anomaly, and when the anomaly happens, then when it starts stepping down, you want to figure out how is it interacting with just recent activity, where it was stepping up. Is it stepping down right through all those levels, all that volume? That's an interesting point. So you can see on this candle, for example, lots of buying imbalance, lots of buyers right in here, this zone. Right, and when it turns around afterwards and comes down through there, you can see how, zoom in a bit more, you can see the red imbalances are here. There's more sellers and buyers in this case. So that is interesting, right? It's totally flipped around from this big green candle to this red candle. As it's going down, you can watch the candle go before it closes or while it's live. You can see there's more sellers and buyers overall on this one as it's going down compared to that one. So there's another very interesting point. It closes down here. It goes through all of this action, right? And then on the next one as well, you have the, as it opens, it pushes up quickly and it gives you another little imbalance, just a little bit. Lots of buyers here. But when the buyers fail and it drops and you're watching it live and it starts to drop through again, wherever you identify imbalances earlier, well, you could just identify wicks, really. That's an easy way to do it. You can see here, these little wicks, all these higher lows, just breaking down right through it with tremendous amount of volume. If you look at this section right here, lots of volume, and it's going down. And then as it breaks through this support areas, look at that, selling imbalances. As sellers come in, price moves down. Now you really got something. So you had the setup over here, and then the confirmation, if you're very conservative, the full confirmation truly happens down here. You can find an entry in that zone with a stop right above the most recent imbalance right there. So there's many ways to do it. But again, you gotta observe how the buyers and sellers are interacting. That's what's important here. Like these buyers that were here that pushed it up, are they still there, or are they now being overwhelmed by the sellers? Which is happening in this case. So again, once you get into these little bit of detail, I think the entries can become very accurate. And yeah, this would have been a fun little move going down. Huh? Yeah, made a lower low here. This looks like a pullback before it continues. Oh yeah, and you have a support zone right there. That may have been a target area, actually. At least to de-risk because of the support. Yeah, but there you go. Not too bad. Overall, though, everything's been really messy and choppy these last 24 hours. This is the oil 30-minute chart. Not much to talk about here. And gold, this is where Tarek and Oliver are making millions every day. How did you trade this chart? You guys really traded this? Oh my goodness.
Last 2 days, gold and silver both are very, very tightly range bound.
Yeah, look at this. Wow, no, I wouldn't play with this.
I think tomorrow morning that jobs data is coming. Maybe everybody's waiting for that to reposition themselves.
Yeah, that could be it. Let's look at it though. Gold. Yeah, all that data, it obviously impacts a lot of things. Gold had a good run up and then dropped back down. It's been grinding away higher. And where it's been stuck these last couple of days, well, looking to the left, it's not very surprising. This was major resistance, choppy zone. Looking further to the left, consolidation before the breakout up. So, yeah, I think this is interesting. This level is interesting. On the upside, I'm seeing more potential for a breakout to the upside than anything else on gold. And I don't know when it's going to happen. It could happen in the next 30 minutes or in the next 30 days. Well, that's the key. Keep an alert up there. When the price gets there, you can watch it and see if there's something to catch. I can't believe it. You guys are trading inside of this zone. Oh, my goodness. I can't do that. I don't want to do that. And silver, yeah, silver's another choppy mess as well. This is even more difficult to read. But let's get this out of the way. And what you can see is you got the resistance right up here. And if you're able to identify that, it's been moving up and it's putting in higher lows. Then when it gets up to resistance with those higher lows during the consolidation, then you have a good potential for a breakout. And obviously the target zone is up to this area. So, man, silver's been wild. How did that thing go? Anyways, cool. So what else is on your mind, guys? Why'd you get me up out of bed before sunrise?
I mean, I'm sorry, I wasn't here for last session. What was those dots on the footprints?
Dots on the footprints. Let's see. Zoom in here. I see a lot of dots. Which dots are you talking about? These ones, right? These green and red ones.
Yes.
Yeah, these are imbalances. So basically it's telling you where there are more. The green ones are telling you there's more buyers than sellers. The red one's telling you that there's more sellers than buyers. We're right here. Right at this price point. And right at this price point. That's all it is. So it's just massive imbalances. And I'm really paying attention to those at key levels to see if, for example, here there's more buyers than sellers. What should be normal is that the price goes up, and that's what happened here. And down in this case, you see there's more sellers than buyers. And when there's more sellers, what would be normal is that the price goes down, but it has not. It's actually going up. So there's something unusual happening here. And if there's a key level right there, then I'm interested for potentially getting into a trade. Because one side of the market might be taking over. In this case, the buyers. Because the sellers were there, but they were unable to push down. So there's something else going on here, right? Mostly it's those limit buyers that want to push it upwards. So that's what those dots are. Just imbalance between buyers and sellers.
Okay, got it. Thank you.
Yep. Dennis, what is the name of the volume footprint I'm using? What's the name of it? It's called footprint charts, man. What do you mean, what's the name? Footprint charts here. I'm using TradingView. Volume footprint. That one. And time frame, I'm not using time, I'm using 1000 ticks. So that's here, 1000 ticks. And for now, if you guys want to see the settings I've put on, where did it go? There's settings. So nothing too unusual. I've changed a few little things. And this one is key. The row size manual and 1 tick per row. So that's when it prints these little bars on the right side of the candles. It's manual, and every row is basically just one tick. Profile display. So that's giving you basically a histogram. What else have I changed here? Not much. This is the imbalance I'm talking about, these little dots here. And there's a 300% imbalance between buyers and sellers. That's when it gives you these little dots. What else? Yeah, not much else. I don't think I played with it much more than that. So there you go. Those are the settings I'm using for now. Anyone in this room still trading on candlestick charts? Time charts?
Yeah.
Oh, no.
Yeah, we mortals are still trading.
Oh, yeah.
You can't follow everything you do, you know? Yeah, pick and choose.
Pick and choose. Oh gosh, I'm
You're
just looking for
blind
some more
sheep, you know?
support, man. Oh, you're funny, man. Yeah, it's all right. Do it your way. That's what's most important. When you're trading, trade in a way that makes sense to you. So I'm just exploring this, and so far it makes sense. If it continues to make sense, I'll continue to use it.
Well, listen,
Yeah.
you made millions of dollars trading off of candlesticks, so they got to have some type of information, useful information that we can trade off of. So,
Yeah, they're useful. They're useful. Yeah. Well, the thing about the time candlestick charts, we were discussing this earlier. There is no significance to a time frame, but at least it gives you one thing, which is it gives you an anchor. It gives you something to stand for. Otherwise, you just fall for everything, right? So if you have a particular time frame, let's say 30-minute chart, and you look for a certain setup, certain pattern, great, because then you will only look for that and trade that, and you will not be bothered with anything else, ideally. And so at least it anchors you from over trading and getting lost in the market. Other than that, it has no significance. On the other hand, when you have the stock market, which is a price moving up and down, what makes the price move up and down? Well, it's buyers and sellers, just like any market anywhere in the world. And so now identifying buyers and sellers and how they're interacting with each other, that's what I'm able to get out of the footprint charts. And now that has significance. So that's my thinking. That's why I'm moving away from those candle charts and looking to get entries on this. So let's see how that goes. But yeah, nothing wrong with candle charts as long as you know what you're doing, as in not over trading, right? Write down the setup you're looking for and practice it. Make sure you know how to identify it and how to manage risk on it. And then, like you said, you can make millions of dollars. It's not too complicated. Just manage your risk. That's the real 80-20 of it. Manage your risk. And most other things kind of fall into place. And here you go, candlestick chart. It's funny, when I first came across footprint charts, I looked at it probably 3 years ago. And I said, there's no way I'm going to take enough time to figure all this out, all these little details of buyers and sellers, because I'm getting results on the candlestick charts. Why would I be bothered? But, yeah, that's changed. It's time to upgrade, right? At some point, you got to upgrade.
So Avi, I remember when somebody asked you, why do you not use the volume? And then you said that because with volume, you don't know who is the buyer and who's the seller. It's just a volume. But yeah,
Yeah.
Footprint chart is exactly telling you where is the buyer, where is the seller.
Yeah, exactly. Good point. Thanks for bringing that up. I like that. I really like that when I can identify exactly, was it buying volume? Was it selling volume? Was it market orders? Was it limit orders? And that's the detail I need if I'm going to use volume, not just these bars at the bottom of the chart that, in any trade book you look at it, they say it should have more volume, therefore it's a breakout. Well, what is more? 10% more? 100% more? Like what? And then you get, all mixed up. I got mixed up for a while doing all that, so I stopped. But yes, this is a much more precise way to use volume. Again, here, imbalance. more buyers and sellers, and unable to continue pushing up. You can see the candle closed, next one opened, and it's gone straight down since then. You can see here was a high volume area. As this candle came down, high volume happening in the same area with a selling imbalance, and continuing down. So it's giving you a clue that the sellers are taking charge, starting up here, continuing here. So these are nice little clues. And over here again, you have imbalances down here, more sellers and buyers. It should ideally continue down. So let's see. But again, this is really minute. We're looking at it in a very small picture. Always look at a bigger picture. So right now it's sitting here on the 30-minute chart. Not close enough to a level, so I wouldn't be interested in trading it here. But you're able to get this information, right? And then you can start having fun with it. I used to have the table. It's not so important. There you go, guys. Again, TradingView is not the only one that has these footprint charts. I think Sierra charts and ATAS charts, and I don't know, there's so many other software out there. Let's take a look. All right, what else y'all want to discuss? Look at that, it's sunrise. Pretty cool. So there you go, that volume imbalance we're seeing with the more sellers and buyers, but then pushing upwards. Kind of makes sense in a funny way. If you look at this as resistance, you have two candles unable to break that high, and this one did break that high. Here's your retest zone, perhaps a long. So there's many ways to use it.
Yeah, you're right. I mean, this is too much information, so we should only look at the level. Otherwise, we'll be lost.
Yeah. Yeah, you see, yeah, right here you'll get lost. You'll think perhaps it's a reversal up here, go short, then you think it's coming down and bouncing off this area. Now it's a retest of this breakout going long. You just you're going nuts. This is called overtrading because you're overstimulated with too much information. So let's see, where's the level on this? It's further up. Yeah, once the candle charts, once the price gets up in this area around 84, then pay attention. Then you can see if there's higher lows and an ascending wedge. Then you wait for the breakout, let it come back, retest at that point, looking for a small scale reversal to catch the long. That makes sense. Or if it's turning around the other way, getting a big imbalance of lots of buyers but unable to push up, instead it goes down aggressively, then you got something for a short. Yeah, fun. So what's interesting with these is you can find a way to put an alert whenever there's a massive imbalance. You can just put alerts on basically so many different futures contracts, not just these 6 that I've got here, but many more. And then you wait on it, you'll still get 5 alerts a day, which is still way too much. And of course, when you get the alerts, doesn't mean you have to get into a position, right? You still got to get there and watch it. This was a good looking double bottom down here.
Can we analyze this double bottom and see if we could have taken that entry?
Yeah, there's a bottom, there's a high bottom, go long. That's all there is, man. Yeah, sure, let's look at it. So it came from up to down, slammed into the level. And what you're looking for is more buyers, more sellers than buyers. And then going up, not down. So I see it right here. The red highlight right here is telling me there's a lot of sellers compared to buyers. But then this candle closed up. It pushed straight up from there. And the next candle came down a touch and pushed straight up. Also, just looking to the left a little bit, you can see the high volume prices right there, these white highlights. Then that moved up. That's interesting. Also, if you look at this candle, about where it opened, came down and looks like on the way up, you have another imbalance here. Zoom in a bit more. you can see the green highlight here. That's more buyers and sellers. So your anomalies down here were turned around, pushed up. And here the buyers are stepping in and continuing up right where there was high volume previously. So that is all very interesting. It pushes up again. High volume happened right where there was some interesting volume previously. And continuing its move up. There's another imbalance right there. Is that it? Again, the green highlight right there. So you can see that the pattern is actually pretty good. Anomaly, and then the buyers pushing, buying upwards, higher and higher. So if you're able to identify this whole section, by the time you have the setup and enough confirmation, the way I trade, I would probably get the long in this area. And I want to put the stop below the anomaly, so that's here. And then let's see, it would be below this candle, and you would have survived the pullback or the double bottom. If you want to be more conservative, wait for the full double bottom kind of setup. You see one bottom, wait for the next anomaly, which happened down here. You can see the price came down, more sellers than buyers, and shoot up, straight up right there. This candle closes, next candle opens, again another little anomaly right here, higher up. So that's very good confirmation. And as it goes up, where was previous high volume, you have the buyers stepping in further. And beyond this, I mean, I'm quite certain I would enter right up in this area with the stop below this anomaly. I would not likely put it below this one. It's a little close for the way I like to do it. So probably just below this one. And then
10 o'clock. Maybe I went from ago.
So that's how I would trade this, or that's how I would read this most likely. I was watching it. And of course, if I have a level right there, then I wouldn't take it anyway because the RVR is no good. But if that level wasn't there and the next level was just, way ahead someplace, you're up there, that would make sense. So you're getting your entry in this area, and your target's up in here.
Let's see.
That would work. So you got a hot mic again, buddy. Watch your microphone. There you go. That's how you catch that one.
Yeah, this looks good. Very nice.
Yeah, good fun, huh?
Yeah.
And here's another one. I just saw this. Let's look at breakouts. So you have this thing coming down, consolidating, and then breakout going down, right? Let's see if we can work on this. How do you catch a breakout using these charts? So let's call that the support level. When do you have the real breakout? First thing you want to see with a breakout is it really gets away from support with higher volume. You can see it in this big candle. All right, firstly, here's your little anomaly. There's more buyers than sellers, and the candle went straight down. As it got into the support zone, you can see that volume increase right there and continued down. So that's very interesting. Heavy volume on the breakout. That's normally what we understand. And here, imbalance, more sellers than buyers, and went up from there just mildly. But I think over here is where I would really identify the breakout at this point. And then what I'd like to see is the price come back up and give me an anomaly in this area right about here. Let's see if that happens. Not quite, huh? Not quite. Have a little bit of a strange print over here. It's a little tricky catching the breakouts. If you have this area, you can catch breakouts during the consolidation. It's an odd one over there as well. So I'm not really using this for breakouts yet. Well, I would be looking for the retest, which in this case, I don't see that it happened. Not in the way that I like to see it. But the reversals are making a lot of sense. Let's see, where is right now is pretty much a small resistance zone. Let's see what real-time price action is telling us. So it went from down to up. It's not an uptrend. It's in a resistance zone. And now, what are we having? Right up here, more buyers and sellers and the push down. No massive imbalances here. Not much here. Over here, you're getting more sellers than buyers. Now it's just getting choppy, isn't it? No room to the left, nothing going on. So this is where it's telling me don't touch it. And this is 95% of trading. Don't touch it. This price action right here tells you everything. Fun. So is everyone now an expert on footprint charts? All good? Don't know what you're doing? Tarek, when you gotta get out of bed, have some coffee, and we'll talk.
Yeah, so I need to get some coffee on to start the day.
Oh man, yeah, it is early. What is it now? Past 7 a.m. Well, I'm pretty much awake now. Good to go.
And the problem now, I'm taking trades. This is the most dangerous part. A cup of coffee and taking trades. So interesting.
You gotta have some sort of indicator. You know, we have all these biometric things or whatever. These smart watches should give you an alert when you are finally at your peak performance, as in you're alert, you're awake, you're not over caffeinated or overstimulated or over exhausted. You know, you're actually at your best physically and mentally and emotionally, and you're well slept, rested, all that stuff. All that balance comes together. Now you're fit to trade. Otherwise, no matter what the candles tell you, man, you're not fit to trade. You shouldn't be trading.
$1 million app.
Yes, that would be $1 million app. I mean,
Clear that brain fog in the morning. Brain fog. That's a tough part.
Yeah.
I got them actually a couple of weeks, like a couple of months back, and I'm trying to associate my recovery with how well I'm doing, because it gives you a score for recovery and stuff like that. Did you sleep well? Your sleep consistency. Did you have enough time? I found out that I don't sleep that much in terms of hours. Because Avi always say you need to be better in life, just to have more clarity in your trading and stuff like that. So this is a step I'm taking towards. Yeah.
Well, that's great, man. You're starting to track that. It's really good. Your sleep. Yeah, sleep's an interesting thing. You know, it's seems a little different for everyone. There's a lot of, you know, common knowledge going around 8 hours a night, whatever. But really, in the end, you gotta pay attention to your own self and your own body and how you function. For some people, 6 hours of deep sleep works. For some people, they sleep lighter. Maybe they need the 8 hours, and then they have to allocate that. Then they need 1 hour on either side of sleep to cool down, and then after waking up, another hour just to wake up. Everyone's different, so pay attention to yourself and figure out how you perform your best. And that's your real trading strategy right there. None of this candlestick stuff. That'll really determine your trading or not. That's your $1 million app right there. Something that can help you with that. And then you'll be able to perceive all this stuff without too much fuss. Put on any chart and you'll make money. Doesn't matter. So that's all important stuff. And there aren't really any courses on that. You know, you can't really do much with that stuff except pay attention to yourself. Nutrition as well. Some people respond well to higher or heavier protein diets. Some people more of a balanced diet. All that stuff. Everyone is different. Once you decide to start paying attention, then you'll see your performance improve tremendously. I gotta say, that's not a very bad time to get into trades. What time is it in New York? It's 9-10 p.m. Yeah, I've seen lots of setups around this time, but just at the moment, the market is generally a great big disaster. We got S&P, yeah. Might be worth sitting out these next couple of days, this whole week. It's just a mess. There's only 2 days to go.
The holiday next week.
Is it? Oh,
Monday,
shit.
yeah.
Monday.
Whose
Monday.
birthday?
A great American president.
Martin Luther.
Oh, was it? That was a President's Day.
Oh, President Day. Yeah. Oh, yeah. Sorry.
President's Day?
Yeah, they only get 1 day. Both Washington and Lincoln, they shoved it all in 1 day. When I was growing up, they got 2 days.
Oh man.
So much hate.
All right.
So much hate.
Yes, the country is imploding. Has been for a little while. Well, all right. Take the opportunity not to overtrade. If you got a day off, that's great. Get out there and forget the markets. Go do something you enjoy. Totally immerse yourself in stuff you enjoy. That way, when you come back to it on Tuesday, you are refreshed. And that's a whole lot of well-being stuff.
By the way, does the futures market close too on those days off?
Sometimes it's a half day, but I'd have to check. A lot of times it's the futures are half day. It'll be open Sunday until the morning, on Monday morning, and then it closes. I think it's open half day, but I have to double check. CME website will tell you on the hours.
I just think it's not worth looking at it during those hours. It's open for 6 hours or something. It's just a waste. They're unlikely to get into something. Probably a lot of settlements, probably volatility, but I just take the time off.
Yeah, that Sunday might be good before Monday. So you might be able to get a trade in or two.
Yeah, whenever I come across these half-day scenarios, I just avoid it completely. I don't even bother looking at the volume. Just avoid it. Don't show up.
This is also one thing I learned. Like I see myself evolving as a trader. That I stopped trying to trade these days. Like the volatility is really low. The fills are really bad. It's very spready. Not the favorable conditions. A lot of traders, big institutions, they're taking a day off. So we don't have to show up every day. This is one thing I see, like it impacted my trading significantly. Just saying no. I used to trade the Christmas Day and all these things this week, and looking at the charts after that, it's just like, come on, just take a break. No one's there to trade with you, so it's algos.
Yeah, I agree. That's good, and that's a good indication. Again, you said that's you evolving as a trader, realizing it's perfectly good to step away and healthy to step away, rather than you're just stuck with the markets. You want to be there all the time. You like the excitement. It's like going to a casino that never closes. That's dangerous. And that, again, unfortunately, it's not that you don't know better. It's just that that's what we've all been fed through social media, again, with all the idiots out there trying to sell courses and subscriptions and all that stuff. They get you so hooked on dopamine. Show up at the open, volatility, price action, ORV, jumping around. And, as a newbie, you're all susceptible to that. And imagine if you never really were exposed to that stuff. You just show up, learn to trade where you only trade when the price is in the right place, at the right level, with the right indications, and don't bother when it's not in the right place, and don't bother when it doesn't give you opportunities for a 10-hour move. So when the market's a half day, if that's what you were told up front, then you wouldn't be lost in showing up and trading when you shouldn't be trading. So that's the unfortunate noise that we've got to deal with here. But then, if you survive the learning curve the first few years, then you realize these things. You don't need all that nonsense that you were taught up front. Not even taught, just told, every other YouTube video. So just be aware of these sorts of things. Especially once you've been around a little bit, you get to know these sorts of things, Just realize that 95% of everything out there is just noise, pure garbage.
And also, like this is like a business, Avi. We just need to take a break. Like anyone who works in an office, a 9 to 5, they take 30 days off a year, or like 22 working day off. How many days off do we take as traders? This is a business. We need to re-energize, flourish, do what's important for us. All of us, we have a reason that we started trading. like for myself to spend quality time with my daughter. Like everyone have his own thing, going out with friends, enjoying life, enjoying the freedom that trading gives. So just to be
Yeah. Otherwise, what's the point?
But meanwhile, while I was learning, I was pushing myself too hard because I wanted this to happen too fast. So I'm like, okay, no days off. Weekend, okay, the market is not open. I'll sit study the what do you call it? I'll have some screen time, replay. Just take a course, watch the course during the weekend, try to push through it, do all of these things. I'm stressing myself just to make sure that I make money really fast. I get on track. But the more I keep doing this, I realize that I get like the more I'm digging myself into the hole.
Yeah. Very good points. Very good points, guys. I like that. You got to remember why you showed up here in the first place. Why did you even try trading in the first place? And if it's occupying your weekend and you're getting obsessed, well, that's not why you're here. Most of you guys, or most people even think about trading is because they want freedom. That's financial freedom and time freedom. Put those two simple ones up front. And well, you're not going to get that if you're obsessed with the charts, even when the market's closed, or you're starting to try and sell courses and turn into some subscription business where you're just hustling on the internet all the time. Most of those guys are not even trading anyways. They're just selling courses. And yeah, you don't want to get lost in that. You really don't want to. You got to remember your purpose. And so you want the freedom. Okay, I'm here, and show up and do it the right way, alongside, rather, what do you call it? Do it in accordance with your purpose, and then you'll be just fine. You won't have that internal conflict, and it works. I can't tell you how many guys have come and told me we should start this app and this course and this website. Man, I didn't show up for all this. I didn't show up to hustle on the internet. I just want to trade, and I only show up maybe an hour a day, 2 hours a day, maybe. And it turns out we have a really good group here, so I enjoy showing up here, talking to you guys. That's really it. That's as much as I want to do. So you got to remember your purpose. Otherwise, yes, you will get lost in a whole lot of distraction, mostly, more than anything else.
I mean, what Tariq said is all true, but for the person who started, or maybe a year or something, I mean, I'll take my case. I mean, it happens naturally. I mean, even what Tariq said is actually I'm doing. I'm spending time on weekends, going through the charts, looking at the education. So it's difficult to take out the time. But yeah, I mean, I spend time with my kids, and I do, but otherwise I spend quite a good amount of time on doing all the other stuff when the market is closed.
Mm-hmm. Yeah, you see, there's a time and place for it in the learning curve. Well, not the learning curve, we're always in the learning curve, but in the early days, we're just a little bit lost, a little confused. It's important to spend time studying, but not burning out and becoming obsessive. I think that's where the problem happens. And in trading, it's a very likely problem for most people. You're a little too obsessive. And learning detachment is important. So spend maybe an hour on a weekend, and you don't have to do a lot when it comes to technical stuff. There's not much you need to know. I mean, these charts here I'm looking at, these footprint charts, are probably the most complex thing I've ever looked at. Probably alongside 0DT options. But that's it, and it doesn't take very long. Maybe spend an hour on it and you get the concept. No big deal. Then it's just a matter of applying it, go in the simulator when the market's open, all that stuff. So yeah, there's that balance. There's that balance. But again, if anything takes you away from your purpose, you got a problem. Just keep your purpose in mind at all times, and then you're okay. Mostly you'll be just fine. Again, most people's purpose here is to get financial freedom, and then a lot of people don't talk about time freedom, but really it's amazing what's available when you're trading the markets. So keep that in mind, and that's it. I had a little nice rule last year when I was trading options. It was very simple. Look at the price action, And if I can't figure out within 5 seconds whether I should take a position or not, then it's a no-go. Don't take a position. And that's it. 5 seconds. If it gets to a level, how does it behave there? It takes me 5 seconds to figure out. And that's it. You don't need to sit there and obsess over it. Maybe it goes long, maybe it goes short. Oh, look, now there's a hammer. Now we change our minds. No, none of that. None of that. You don't want any of that stuff. Yeah. Keep your purpose in mind. Otherwise, you will get lost. And especially in the trading business, again, in this world where everyone's making a whole lot of noise all over the internet, you get lost very quickly. So be careful with it. Be super careful with it. I can tell I set my trading journey got set back about 3 years, I think, because I got lost in the noise in that other group that I was trading in. I just left way back, like 3 years, 4 years ago. I would have started looking at naked trading and options trading and futures trading probably a lot earlier, rather than just getting lost in the noise, what those guys are always talking about in that circus. So, you don't want to get lost. It's very, very important.
Yeah, I think that's the market preying on us, using those tactics to take our monies. Is getting lost in the noise. I mean, all the stuff that's on the legacy news, all the stuff that's on social media, all that stuff that's on, Discord and internet, and like you're saying, selling the courses and getting the education. There's so much education that's just out there that's free to utilize. But I think the biggest thing coming here is having mentors and as a group working together to try to accomplish a common goal. But yeah, getting caught in that riptide of like you said, noise and distractions is really confusion and delays. Like, it's what keeps us from elevating or getting that learning curve faster. So I see what you're saying.
Yeah, absolutely. And you made a good point there. Finding a good group you can be with and trade with and grow together, learn together, that sort of thing. That's the key. Just the right environment, the people on the same page. And show up in a group, and every time you show up in a room like this, you're being sold something or the other. No, you don't want that. You actually want to talk to each other and grow together. So that's what's important. Yeah, you got it.
Yeah, that's a golden key.
Yeah, it is. That's it. Like-minded people, just trying to do it right, not wasting time on the bullshit. I mean, really, if you really want to trade, I can tell you can make a hell of a lot more money actually trading than just wasting time selling courses. It's amazing what's possible. Like real 80-20 stuff. It's shocking.
That's what always confused me about those people. Just thinking, like, if you're making so much money and you're so successful, why the hell are you sitting and selling courses for $99?
Yeah.
Like,
Yeah.
if I'm making so much money and I'm so successful and I'm so good at trading, I'm not going to waste my time with selling courses. Like, it's different what you're doing. You're not selling courses. Like, you just have a community around you that helping each other, and you're helping as a mentor, and mostly altruistically, but like, yeah. That was always confusing to me about those people.
Yeah, that's right. And you bring those questions up, and they'll give you a million different answers spinning around in the same circle. So yeah, you can see right through it, can't you?
And they'll be like, "Oh, I'm doing it for the community. Oh, I'm doing it for the people." Okay, then don't charge them if you're doing it for them. Jeez.
Yeah. And the funniest one, when I started to understand how it was working, was you buy subscription, show up in a group, and once you're in there for the live trading or whatever's going on in there, every 30 seconds you're being told about a new funded account or a new course or a new subscription or a new package. That's the real giveaway. And the whole thing's just a great big fraud. So Anyways, you guys have all seen that. I've seen that plenty. I've been on both sides of it. So, just trade and trade with good people around you. That's it, man. That's it. And you'll find real freedom.
Like it's not easy to find a community like that, you know.
Yeah. Well, the thing is, when there's a really good community out there, like high quality people, yeah, as you said, it's hard to find because the people who are in these communities, they want to protect these communities. They want to, don't want to just let anyone in, and then it turns into a real marketplace. So that's why they're hard to find. And so it's all counterintuitive. It's so funny. The ones that are easy to find are obviously the ones that are all over social media. Hey, join this, join that. Here's another discount.
Exactly.
And hang around the business long enough, find your way, find the people you want to be around. Yeah, good stuff, guys. There we go. Now, these are the bigger things. Again, these conversations we're having in this session are more important than candlesticks, because this is what will help you really grow, really make it bigger. Yeah, good stuff. Look, now I can see the sunrise reflecting off the neighbor's window right into my eyes. Fantastic. Time to go out for a run.
Well, it's dark and it's snowing over here, so.
My goodness.
The contrast.
It's shocking. Well, I'm thinking I'll go paddleboard, go to the beach, and do all that.
Well, at least it's warmer. It's -7 only. It was -20 yesterday, so I know it sounds funny, but it's actually warmer.
Wow. Shit. I don't know. It's probably 20 degrees Celsius outside now, and I got a jacket on inside. It's amazing.
North Americans look at us as spoiled brats, 20 degrees in winter.
You gotta have your camera pointed at the window so we can see the outside. That would be nice.
See outside. Oh god, our neighbor's not gonna be happy about that.
Oh, you got neighbors looking in your windows?
No, they can't really see it. There's lots of trees and stuff, and it's across the road. It's a large road. But yeah, I'm not gonna point the camera at the neighbor's house. Not very nice. It is. I mean, the sunrise is beautiful, though. Very nice sunrises we get here. Yeah, fun. We're getting some good fog these days as well in the morning. Crisp, cool air. Yeah.
20 degrees, crisp, cool air.
Yeah. I find it cool. Oh my goodness. Again, it's so funny. I mean, I lived in Colorado and it was -20, like Nassim was talking about. And even then, I was like, it's crisp, cool air. It's okay. It's all perspective once you get used to something. Oh, man. Anyways, guys, let's end this session here. Y'all got anything else on your minds you want to discuss this lovely morning? Everyone good? Everyone clear? You know what you're doing in life? All that fun stuff. Cool. All right. Let's end that one.